Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Happy New Year. This is our first webinar of 2010. So today we have John Netto with us, and John's going to be talking about balancing volatility across asset classes in 2010. John is the president of One Shot, One Kill Trading. John does a lot of trading, and he's also really good at explaining what he does, because he does trade for a living, but he is very gracious in coming on occasionally the IC webinars to talk about all the different nuances of trading and what he does, since he does these each and every day. It's really important to listen to someone that is trading professionally. So John, as I said, really happy that John's with us. John, thanks for joining us at the IC. Really appreciate it. Happy New Year.
Thanks for having me, Steve. Happy New Year to you and to everyone who's joined us on the call.
Well, you can take it away. I've given you the privileges, so you're good to go, John.
Excellent. Well, thank you. Well, everyone, again, hope everyone is having a happy New Year. We're kind of getting settled back into the markets here. It's day two. We've we obviously came out yesterday morning with much of the same trends that we'd seen from 2009 in place in terms of the very favorable long carry, long equity, even sort of a mediocre bond or fixed income market out there that didn't exactly come and crush the fixed income space, but nonetheless sort of seems to be in line with the market that's seen a little more risk appetite, or actually a lot more risk appetite than risk aversion. Rewind 12 months ago. In January, we were coming off of the heels of the most volatile year that any of us have seen in our lifetimes, and a lot of question marks and uncertainty about how things would progress. We saw a lot taking place, and again, the initial thrust, or most of what I've done with the ISE, has been about promoting and about making people aware of the currency options that are available and how you can effectively use options on the ISE to hedge out or to take an opinion or a viewpoint on the markets with currencies. And what I find interesting, and I'm for the most, I believe in talking freely during these things, that I'm going to talk about balancing volatility across multiple asset classes, but really just coming away with information that you guys can use and you guys can apply in your current trading plan or trading regimen is what I really want to achieve from this. So I'm going to bring up things and talk very real world and in terms of what I'm doing and share with you guys the positions I'm putting on, and if you can, and then hopefully you guys can derive some value from that. Briefly, I'm president of One Shot, One Kill Trading. You can, if you have any questions at the end of this, by all means, please send me an email. I'm very eager to share and to work with you guys. I've been blessed to do what I do and to have the people around me and those that have helped me in my trading career. Clearly, options involve risk, as I'm going to spend a good deal of time today talking about volatility, and inherently, it's a huge component in terms of options pricing, what the vega or what the implied volatility levels are in those options. So, take a peek here over this disclaimer, but don't stare too long. Just a little bit about the ISE FX options. For those of you who are not familiar with them out there, allow you to take on exposure across, really a number of the majors and price in terms of U.S. dollars, Aussie, British pound, Canadian CAD, Euro, Yen, Peso, New Zealand dollar, Swedish krona, and Swiss franc. Now, while you can't trade the underlines via the ISE, at least the last time I checked, I trade a lot of currencies, and whether it can be via the spot or via the futures, these ISE options can provide a very nice hedge to take on some exposure, and then you can use the underlying to trade around them. So just something to keep in mind. A number of options brokers do provide this. Interactive Brokers is a great place to start off if you want to gain access to this, and obviously a number of other clearing firms out there as well. European exercise can be traded as spreads. I'm going to talk about in terms of some of the strategies today. When you are balancing volatility, you may not want to leave that tail waggling out there or open. So you may want to put out spreads in terms of like if you're going to be, short vol in one asset class and long vol in another, you may want to take on that short vol exposure via spread so that you can mitigate some of the risk in that. Okay, the class objective. Really want to go over 3 main points today in the next 45 minutes or so. The first is to provide an introduction to the concepts and strategies of trading high volatility and low volatility. In the last 12 months, we've really seen quite a bit of both of them. Going back to Q1 of 2009 and into Q4 of 2008 and Q3, really the tail end of September of Q3 of 2008 saw an extremely unprecedented high volatility levels followed by a record compression volatility. And so we're sitting at implied vol right now at about 2021 on the S&P, and I always kind of start with the S&P because it represents, in my mind, the global appetite for growth and risk aversion and everything else. That vol curve does steepen a bit as you go out to future months. We're seeing implieds out at 23, 24, 25. So we'll keep that in mind in terms of how we want to manage around the overall market. Also, the second objective today, building a dynamic volatility portfolio across asset classes. Going to talk about the metals. Going to talk about energies. Going to talk about currencies. Going to talk about equities. I think that those 4 asset classes right there, and the products that are available at the ISE, give you some real choices and a chance to maneuver. And that as a trader is really what you want. And in terms of setting up various contingencies, it's not just about. And I cut my teeth, day trading the QQQs back when there were only 3 Qs and not 4, and really, there's a lot of systems that okay, go long, go short, but if you can incorporate a volatility system or a couple of volatility systems so that if the market does, let's face it, the last month and a half for a lot of traders was a struggle. The range, we saw the S&P hit up near 1120. I counted 18 times it came close to that area and didn't break through. And so with that kind of consolidation, with that kind of congestion, just having a long and short attitude can be somewhat frustrating. But having some volatility spreads out there to at least maybe dampen or smooth out some of your returns is definitely a benefit to keep in mind. And that's when I talk about the third bullet: offer ideas and strategies for current market environment. The ranges haven't necessarily gotten too crazy. Even with the gap up go up scenario in the S&P yesterday, we're still talking about a market that traded in a more or less an 8 or 9 point range intraday from when U.S. equities were open. And again today, another looks like the high was up near 33, the low down near 25. So again, another 8 point range. This doesn't that doesn't pan out too particularly positive in terms of what annualized what kind of implied vols we're talking about there. So just look at those 3 things. The outline of the presentation, just very briefly. Because I realize that we have the audience here that has, very extensive and extremely advanced and sophisticated background to people who are just getting started. So I do just want to touch on the basics of just the Greeks, just really, really quickly, guys. For those of you that know it, bear with me through that. I also want to go over a comparison of historical volatility for equities versus currencies. I think that's important in terms of what that represents. My strategies for Q1 and 2010 volatility environment, and then a real-time market application while I'll take some questions, because I think the Q&A, and again, the real world, top of my head, what am I seeing, what am I doing? If you agree with me, great. If you don't, that's cool too. There's a lot of ways to skin this cat. Bulls get paid, bears get paid, hogs get slaughtered, however that saying goes.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.